Okay, welcome to this video on the cryptocurrency markets. Now, you may have forgotten that these existed as you've all been trading friends, keys, etc. But here we are. This is the purest form of cryptocurrency. And we are going to dive into a review of the markets and take a look at where we are and how things are shaping up and try and paint a picture of the current landscape. We'll use maybe a couple of other markets to help us try and create and embellish that picture slightly to try and determine an outcome in a direction that we think that markets may head from this point. So since the last time we spoke, we've seen a larger sell-off in the markets on what looked to be a breakdown from this region here at 25.7 on BTC, only to be rudely awoken the next day in realizing that this market once again is just going to kind of, claw back and undo and round trip trades as we traded back above that 25.7 level on the daily time frame, swept a lot higher, but have continued the charge over the last couple of days, so not really kind of like falling away from that side just yet. But it does paint a kind of an interesting picture of where we are right now. So on the lower time frames, we're seeing that BTC is kind of doing all of the right things on the lower time frame. So we came back up here with this really aggressive move. We got back above the former resistance points at 25.9. And this point is also that important weekly low that I've been discussing. That's the same level. So we had a bit of hold up underneath that level. We managed to get above. We retested that level now as support here on the lower time frames, and we've started to push away. So BTC is doing all of the right things, and the natural kind of gravitation point for BTC is now going to be up here at 27,000. That is the natural point I think BTC will look at trading into should conditions remain positive or we get some injection of positive news. I think that is the level that we'll end up moving into. It's going to take out everything from this region. It's going to fill in some of this gap that we've got in here, and will provide us with a retest into this supply area from which we saw a lot of selling the first time. I would also imagine that we would overextend the majority of time frames in order to produce this move and move up into this zone. The higher time frames are relatively interesting, and everything still revolves around these lows that we've been discussing for the last couple of weeks. BTC looks as though it's making a divergence down here as well. So you've got the daily bullish divergence. This is a long period of consolidation, so we take it with a little bit of a pinch of salt here. But we also know that, like I said before, BTC is doing the right things in terms of reclaiming some of these levels, which adds a little bit more weight to kind of the bullish strength through here. So what we've got is the awesome oscillator with the divergence between the lows here, and we've got the RSI, which is ticking up nicely again and back towards this midpoint. So it certainly looks as though we're trying to prepare for some form of impulse back to the upside versus continuation in the death lower from this point. Now, the weekly chart is the one that I covered off in a bit more detail. First time that we've had the weekly close below 25.9, it was tiny, but it still happened. Okay, so the weekly close was still lower. It was only tiny, and now we need to see what the result of this is. So there's a couple of things from this point. In line with market structure, we may go up, we may create a lower high, and we may trade lower. We may go up from here and we may create a higher high, and we may invalidate the fact that this is trying to change structure. So if you saw the last educational video, I was referencing the fact that market structure changes from uptrends into downtrends require both a lower high and a lower low, or vice versa, a higher low and a higher high. So when you've only got one of them, as we do in this situation here, where we've only got the lower low, this market can still rally into a higher high territory. We can't class this now as a downtrending market. It's done 50% of the work it needs to, and now it's to see whether or not it does the other 50%, which would be the lower high. So we've got our lower low. We would now want to see a lower high, and that would give us the confidence that we had now flipped this structure into a downtrending structure. Now, obviously, there's different ways in which that can happen, and it doesn't happen always so cleanly. So it's not like BTC might just, trade cleanly up into this 29,000 marker, make the lower high, and then start to sell off. It can also be that BTC can, squeeze here, then we get some tragic news event, BTC trades here, so it just immediately continues the low path. Then we get a lower high like this, and that's it. Okay, so our lower high doesn't have to happen up here. It can happen down here after another batch of selling as well. So we just need to be kind of cautious and aware of what that means. So we know that the higher time frame made that lower low, but really now is a decision point, and we're still talking about a weekly time frame. So we're still talking about something that can take a long time to materialize. And we expect to see plenty of volatility and back and forth in the market before those decisions are made. So despite that being a higher time frame view, it doesn't necessarily shape what you're going to be, kind of narrowing down to on a 5-minute chart. Neither should it kind of force your bias into purely one method of thinking. For the majority of people, the weekly time frame is simply too great to make their decisions from, and they would rather be operating on the lower time frames anyway. So as we complete that wonderful segue down to the lower time frames, we can take a look at the 3-day, and we can see from a 3-day time frame that actually this low here is the important one. So 25,100 is the important one. It's also the level through here in which we've also kind of got this former resistance point as well. So we've got quite a lot of action that happens between 24.8, 25.2, kind of in this zone here is a really nice area for us. And we can see the wicks already responding, and the ones that we had here in the dip below 25,000. We can see the response through this region so far. So as it stands right now, this looks as though it's the kind of the SR region, but from a market structure perspective, this is our important one. Now, I've spoken before about the way that we usually get these periods of volatility, or we usually get kind of impulse into any snaps of market structure. So if a low gets busted, then we expect the move to be quite aggressive in the direction of the break. If that's a high break, we expect the market to rally. If it's a low break, we expect the market to sell off. So when we've got this area here on the 3-day, this is an important level. If we combine that with the fact that we know the weekly low has already gone, this is the protection point again on the 3-day. So I suspect that if there is volatility and aggression to be shown on the downside of these markets, then it is going to come on a break of 25. That's the level I think that will give us the impulse and the volatility and start to sell off more aggressively. If we take a look at the daily time frame, it's the same level. Right, so it's the same zone on the daily. We know that it's going to be a support break combined with a market structure break, combined with a weekly market structure break. There's a lot of reason for us to believe that a breakdown of 25 is going to be the one that is going to be a more impulsive breakdown, that's going to be more unkind, and certainly show more violence than we've seen. That would be my prediction through this zone. So now we know that the weekly is, in a relatively poor position, having broken the low. But again, we know that's still up in the air in terms of what the next decision is going to be. We know then that the 3-day and the daily are at their protection points. They're at the protection point of the low. So they're looking at protecting the daily low, the 3-day low. And we know again from previous discussions that this is an important point for people to join into the market, so that people start to get long, because the risk reward is very good from getting long in an uptrending structure when we're down at the lows. And therefore, we're kind of, it brings a lot of market participation around these points, because they're very good areas for people to join into the trending market. So there's a protection effort going on right now, and we've seen a good bounce on BTC. So we're starting to work our way down the time frames and paint that picture for ourselves. Now, when we get down to the 4-hour, we basically go into the discussions that I was having before, which is that we're holding up really nicely above 25.9. That should be the marker for us, I think, through this region now. And as long as BTC is holding this level, then I think trading up towards the 27s, 27.2 is the next logical place for BTC. Now, this is a bit of a grind at the moment. We can see plenty of wicks through these highs, but we also know that this is a pretty clear path for BTC should it start to break through and show some volatility through these zones. I would just keep an eye, if you're trading on the lower time frames, around the build-up of lows. So we know at the moment that we're kind of snapping all of these highs. We're puncturing into the highs. We're getting small corrections. We're puncturing into the highs again. We're getting corrections. So we're kind of grinding up this zone. Now, what can happen in situations like this is that we get a sell-off on one side of the market like this, and so we'll end up taking the lows down here and then rally again back in line. So when we get this build-up in lows that haven't been taken, it's often a time for the market to show a bit of impulse to the downside, take out the longs that have built up during this zone, clear those out, flush it out, trap shorts, reverse, head back higher. So just be careful in these kind of grinding structures that you keep an eye on the lows, okay? Because it's usually one of those efforts that they'll grab some of the stops below here and then continue the ascent back upwards. As it stands, I think the lower time frame paints a pretty decent picture for continuation to the upside. I think that actually the market looks relatively decent from this perspective. And again, we can kind of lay out some very simple markers from a TA perspective on what we could hope to achieve for any runs through here. The alt side of things and the ETH side of things becomes slightly more kind of difficult, let's say, because this side of things is a little bit more concerning. There's the best way of me phrasing it, or the simplest way of me phrasing it. So what we've got the 4-hour resistance point for ETH, and we're yet to break through that. So unlike BTC with that big 25.9k push, and it just runs through that zone, former resistance region, here on ETH, we're actually still underneath resistance, and so not a particularly good picture. Now, the bears may say, well, BTC is squeezing the shorts, it's done a relatively decent move up from the lows, but actually it's still just a short squeeze. And ETH is still underneath resistance, and a lot of alts are still underneath resistance and currently just tapping into their resistance points. And so I completely understand that argument from where we are right now. And if we're going to see a kind of a true run in crypto in a period of green, then ETH really needs to flip this area. And unfortunately, right now, it's still doing the things that would be more conducive with a short squeeze than a sign of strength from ETH. So beneath the resistance here on the 4-hour, this is now an important 12-hour daily zone for us. And we can see it here, so we can see this 12-hour candle just squeezing into the zone, but not reclaiming, and the daily level being a little bit higher at the 1630s. There's two important areas through this. 1620 is one, because that's where all of the selling has taken place so far, and previously it's where all of the buying was taking place during these dips down here. The other important area is 1640. So 1640 has always been kind of a good impulsive zone for ETH. Here we can see there's a big resistance region, a big support region, and it's an area that ETH has kind of gravitated to and operated around for a good period of time now. Now, the price action today has squeezed against this cluster on the rundown, taken everything from there, and still closed below the resistance. So we're waiting to see if we're going to see some increased strength in ETH to get back above this level and to see if that we can recover this picture. And the same is really true of a lot of alts. And so ETH will just take as the mother of all alts. And the same is true on the picture across many alts. The only difference with alts is that a lot of alts are showing signs of slowing down momentum into these regions. If we take LDO, for example, we can see that LDO through here is actually forming this big bullish divergence all the way down here, and we can see that on the daily time frame as well. So we can actually see that what the awesome oscillator is indicating is that momentum is slowing down into these sell-offs, and therefore we can expect potentially a counter trend rally with that. In order for that to happen, ETH needs to show some strength, and it needs to start trading above its former resistance zone. Until that happens, you have to favor the short side, especially on alts. And if you want to take the long side, I think you're choosing BTC over ETH or any alts at this point in time. If we start to see some signs of life, if we see some signs of strength from ETH, I think you can flip that thought process, and instead you can start longing alts to try and take advantage of any squeezes that are going to be present on that side of things. As we're heading closer to the weekend as well, it might make it a more interesting argument in terms of being long on alts for them to play any catch up, because the way that we'd think about this right now is that BTC is trading considerably above its resistance level. I say considerably with a pinch of salt, but ETH is still underneath its resistance level. So the catch-up play we're looking at is ETH to break resistance, alts to follow suit and to put some pressure on some of the rundowns that they've had. And the way and the best situation that we may have for that is that a nice weekend environment with BTC chilling out, recovering, taking a rest, while alts have that opportunity to run and play the catch-up leg against BTC. For now, long BTC, short ETH. If you're going to be in a long side, BTC should be your focus. If you want to be in a short side, ETH should be your focus. ETH BTC looks fucking ruined as a chart as well, so it doesn't look in a good position. And obviously, alts are going to be the preference on shorting over BTC. I think BTC is the weakest market to short right now. If you are inclined to take the short side of this market, I don't think you should be looking at BTC. And then the last one we'll cover off here is Sol, because again, Sol is a little bit like ETH. It's done the squeeze all the way up here towards the 1930s, but it's just tapping into the breakdown region that we've got on the higher time frames and on the 4-hour chart. So we're just tapping into this breakdown cluster here at the 1940s, 1950s. But lower time frame looks as though it's flipping this region here. So this 1850 resistance point that we had on the lower time frame, get a very nice clean breakout candle. Looks as though we're trading back into this zone now. So potentially we may see another effort from Sol to try and move up this side. We also know this is a very heavily shorted market. The narrative is very much against Sol. And so it could decide to squeeze a lot harder through these zones. All right, well, I think that's everything covered off. Thank you very much to new sponsor Woo. If you're interested in signing up, please use the ref link that I'll handily attach to this tweet and this video. And good luck.